Welcome to another market review for the week ended July 10, 2020. My name is Ambrose Omodion. This video, we are looking at how the market has performed for the period and the likely outlook in the new week. But we are considering the impact of depreciating Naira and rising inflation on the stock market and other investment window. What are you expected to do at this time that any season around the corner? At the same time, the government just signed a 10.8 trillion into law as budget for 2020. I know that was reviewed despite the ups and downs in oil price. The budget front and back, finally they've reviewed the budget and have been signed into law, and also the oil price. And at the same time, I'm telling you, now that anything's around the corner, how is investors going to take advantage of all this? Where is the funds moving to? Because I'm telling you, funds are entering the system now. Where are these funds going to? Will these funds be able to bail out the economy after we have recorded about 68% unemployment, no inflation on the rise for almost 11 months, and as we speak, the manufacturing sector is contracting, and our industrial output is declining. All these are factors that we should consider at this time. Yes, don't forget that what happened in the month of May and April and May might not happen here, because that time there was liquidity in the system, and we know the source of this liquidity, and it was going direct to the market. These liquidities are coming in form of all this. Are they entering the stock market or other investment window? Are people trying to sell down to move to equity market? These are what we're going to discuss as we go into the analysis this morning. But I will tell you that the market under review, the week under review, was a mixed trade of 3 days up market and 2 days down market. And the market opened for the week at 24,336.12 and closed at 24,306.36 for the period, losing 29.676, representing 0.12% decline. Extending the decline for 2 weeks. Don't forget that the previous week that the market lost 1.99%. That means for these 2 weeks now, we have seen a decline for almost 2%. But for the week under review, the advances in number for every stock that was up was 25 stocks gained for the week, and while 33 stocks declined for the week. And this is the market data for the period. But before we go further, I will tell you that there are, for all these factors like I mentioned, the depreciating Naira, dynamics, and at the same time the rising inflation and the crude oil price and expected earnings, how it's going to play out, even with the budget that are signing. Because don't forget that the money in circulation for the month of May was declined, and these are things we're looking at. Where will this fund be going? Where will this fund be going? Is it to the different critical sector, or is it going to ameliorate the life of Nigerians? You want to look at this, and that is going to play out on the equity market. I said for the depreciating Naira, it's a plus for the market, because ideally, when you are devaluing your Naira, it's good for an exporting economy. Naturally, it will attract more money to your environment, because now you have what to export. People call to buy because your goods become cheaper because of what your devaluation. But now that we are not exporting, apart from the oil, the oil will know that oil has also international price already in dollar. That means that will not affect as we speak now. But I'm telling you that this Naira devaluation is a plus for equity market. Why? Our price of stocks will become cheaper now for foreign investors to enter. And I told you earlier that we are having a low interest regime generally in the world. But then, if that many investors, big funds, are moving from one sector to sector, looking for opportunity, moving from one climate to another, looking from one currency to another, where there's opportunity. And in a emerging market, our market is one of the undervalued market in terms of margin or frontier market. For that, we expect that foreign funds will start entering the market any moment from now, if our economic policies are pushed direct. But I will tell you that the new single exchange rate that CBN has achieved by devaluing Naira to about 381, just for them to have a single unified exchange rate. It's a good one. That will also be another attraction for foreign investors if they are sure that yes, when they come, when they are going out, there will be no problem. It's a pointer that we are likely to see inflow of foreign investors into the economy, because our Naira will devalue, and our stock become assets, and let me put that, become cheaper for them to call. And at the same time too, the rising inflation is also threatening other investment window, that we might see outflow of funds from such investment window again. If inflation continues to rise, it will be a threat to those windows, that they will start selling to go to where they can hedge against what? Inflation. And the only way instrument you can hedge against inflation is the stock market. I said it's the stock market, because this is where, if there is inflation, the companies that are listed on the exchange are also producing, and price of goods are going down, and they are selling. That also impact their performance. Their price will go up. That means this inflation will not affect your fund. Your fund will be flowing with the market and also with the economy. For me, that is the attraction in the equity market. Yes, the expected Q2 number, half-year number, might also drag the market down, which we are factoring before now. Investors, traders are factoring now, and prices have been going down. Apart from the banking sector that had an uptrend for the week under review, and we are quickly going to go to that banking sector to show that this rally was, this rally won't go far, because there's already a sign that there is a double top in terms of money flow into banking stock. That means the both banking stocks are likely to start looking down any moment from now. Considering that these banks are highly exposed to one, the economy that is dragging feet is going to affect the banking sector, because most of their loans might not come back complete, and they're going to make provision. Not only that, if the economy is dragging feet, that sector is where you can see the will start, because it's going to affect them. Knowing that the banks is like the bellwether or the engine room of any economy. For me, I see that will affect the banking stock for a while. But investors should also look at that and take action on what to do now. Let them not be carried with the recent rally we saw in the bank. And also, if you look at the bank's indicators, the money flow index for the banking sector, look at this, where the market was when the rally was in January 2020. This where the index was, and market price was going up. It went down as low as this. Now it has come back to meet that same way, and this is what we call double top in technical analysis. You can see at this point now, this point here. You can also look at this point at the same time here. This called double top. The possibility, and also it's a resistant line, that a breakout here will give, but the possibility of breakout at this level is very slim. I'm telling you, if you look at this point, a breakout here is very slim. They might likely go down here when it touches this level. As we put that, consider that the dividend they're going to pay is very small in terms of payout. And not only that, price of this banking stock has gone up to this level. That means the likely possibility of going down is high. If you also look at the MACD for this banking stock, it also gives you said that you have to also be very careful. The MACD also said that it's already curving, going down, and that alone should tell you that you as a trader or investor, it's not the time to you to jump into banking stock, because you can see that the histogram of the is already looking down. Let me just show this the arrow that you can see it here. It's looking down already, and the possibility of crossing this signal line down and it become bearish is high. For me, investors should be very careful, and this is one of the mover and the shaker of the market, the banking sector, because the rally last week, and you see that the market was able to resist decline and thus losing marginally. And because if you look at other industry, they lost heavily for the period, but the banking sector that gained about 5% for that week alone supported the market to look at that marginal decline. That is for that. And also, like I just said, that the the depreciation of Naira is a plus for the market, then the rising inflation, as I said, is a threat to the other investment window. And when this inflation continues to go up, the possibility of selling down those other investment windows to equity is high. If you really want to hedge against inflation, yes, you have two goals of investing: one for capital appreciation, another one is for capital preservation. If for capital preservation and capital growth, the equity market is the right place to be, because you can play defensive in that sector with some stock that has proven to be defensive stock. Not only that, there are some stock that also, because of the reset in the economy, the sector some sectors are likely to benefit from what is happening right now in the global economy and local economy. For me, this is the time for investors to be smart. That is why, if you have not gotten our strategies, our 6 videos on strategy how to trade during a changing market dynamic and what recession, you need to get that video. All those stocks that are defensive stocks are categorized there, and how to trade them and how to buy them. The technical analysis chart also was discussed in that video. You need to get it. And as I said, mastering earnings, earnings season for profitable trading is also available. You can get these videos and make use of it at this season. And knowing that those videos are not time bound, you can keep them any season. You are going to make use of this video. Then now I said that the inflation is already at the 12.4. Now that the NPR is around 12.5. And as we speak now, this other investment window, like the Sukuk bond, is about for yearly Sukuk is about 7.2. While for I can see that the longest bond now is trading around 5% already. That is 2023 to 2025 bond is around around 5% yield. It will tell you that it's far below inflation. But for you as an investor, you don't need to look at that at this time. Yes, you can say you are running for safety, but one thing that if both your capital is not preserved and your return is not preserved, it's better you look at where you can grow your capital, at the same time preserve your capital. Put the equity market in, because there are some stocks as we speak in equity market that their yields are far above what is happening in the investment world. The yield of some stock in the market, I will tell you, I'll mention some of stock that have good yield in this as we speak now. Julius Berger yield for this as we speak now is about 15.99%, which is far above inflation. UBA yield is 13%, is above inflation. Zenith Bank yield as we speak now, dividend yield is about 15.227% as at market close 10th of July. While that of Police Microfinance is 16.67%, and Africa Prudential is 17.5%, and UCAP, which is United Capital is 18.52. This is the highest in the market. That look at, we're having inflation, as at the inflation at about 12.4, and we're having a stock that can give you 18.52 yield. That means it's far above inflation. Then Dangote Cement is also above inflation, 12.70 as we speak now. And Lend Africa, this is a company that we're expecting their third quarter in the market. Lend Africa is having 14.15% yield, while University Press, also match account, is having 14.85 yield, and NACO is having 13.76%. For these are stock again. There are many of them are also at the same range with the inflation rate, 12.4. But because we want to show you the ones that are above inflation that you can use people to hedge again. Yes, as the price are coming down, even when they cut their dividend because of the COVID-19 impact for the year 2020, the cut of them, because the prices are low, you're still going to have a good yield from their dividend. On that note, I see that investors should look the way of equities. That is why I said there will be flow of funds from all those investment windows to equity market any moment from now. also when we expect that the injection of funds into these critical sectors will start reflecting on the economy, and we know that there is too much money also in the system now because of government trying to bail out the economy, and also the low interest rate that are pushing funds to the market, and this will make equity market more attractive because when there's low inflation, low interest, the equity market benefits from it. I see the market find it's a level after the earnings season. That means as a good investor, if you want to play any stock now, like us an investor, what we do for those penny stock, we have suspended trading them. No, that's why we are not giving signal for this week, because we are seeing that those penny stock, the result might likely not to be too good, and at the same time, because they are penny, you can enter and you'll be hooked. For us, we are looking at those mid cap and high cap stocks that has potential, that are selling at a good discount, that investors can take advantage during the earnings season. That is why you, as a trader or investor, this is time for you to take advantage of the earnings season momentum and action that is different from other normal market period. But this earnings season, there is order that come with it, there is force that come with it, there is momentum that come with it. Take advantage of it. And these prices are coming down, they are making it more attractive for you to position. That is why, as investor, you need to follow us in Invest Data, so we can guide you on what to do. Now that we have mentioned this stock for you, these are stocks that are trading above the inflation, above inflation, that you can use to hedge or inflation, and you can use to. For me, I see that funds will be leaving most investment donors if this inflation continues. And I'm telling you, they have not seen inflation coming down anything now. This inflation we're seeing is likely to hit 13.2% before we can see slow down. Why? Because as government is going to start spending the budget, despite that the service, what they're going to service debt is more than the capital project, because from the budget alone you can see that our budget is fat. I would say it's fat for nothing, because if we're having a budget of 10.8 trillion, we're using about 2.9 trillion to service debt, and we're using 2.4 trillion for capital project. You can see that you are using more money to pay debt or more money to invest, what that will drive your economy. I think we should see that as a nation and review our rising the debt profile, so that we can curtail it and make more meaning from what we are budgeting, so that it will reflect in the life of Nigerians. But when you get 10.8 trillion budget, it's sweet. You think, but how is it reflecting in the economy? These are the things we should be looking at this time. But for me, investors should start looking at sectors and equities, industries, and also all those ETFs again, is a form of what defensive. I'm telling you, instead of you putting your money in all those other fixed income or money market instruments, you can look at some ETF and no ETF and put your money in those ETF for now. And also those defensive stock in the market, go in there and hold. They are good defensive stock. But for me, those banking stock, for me, investors should not look at it that they're about to correct, to pull back. When they come down, you can have position for even for the second quarter dividend and pay. But at this price, we need to hold. We need to hold on, because we have seen that the banking is already banking index is also that is already on the bearish wave. We need to also be careful on that. This is where we can draw the curtain for today. Looking forward that the new investment we are entering will be profitable, but we are not giving signal for it, because most of that have signal are penny stock. And this any season, those penny stock, if the results are not positive and you are entering them, you might be hooked in those penny stock. That's why we are not giving signal for this week. Investors should just hold on in their position they are, especially those that take position in those dividend stock that are here March at year end, that you should position them. But as we speak, I said earlier, in this new week we are entering or going forward, because we're expecting more of a half-year result, and this half-year result is only the banking sector and few other sectors that pay dividend. Those March accounts that will come with dividend, that we have seen that have potential to pay dividend, are likely to rally when every other stocks are looking down, because those ones are coming with reward. don't forget that you are looking for what will trigger prices. Even though you're a trader or investor who are traded in the dividend, but you are a trader, it's factor that can move price up, and you can make your 15%, 12% and come out. While the investor will take what? Will take dividend and hold. This is how you should invest this period. Just extra patient and don't panic and run into other investment that you don't understand. Just play with the territory, the environment, the area you understand. Go up or no, go for more knowledge, up your knowledge on how to invest wisely in equity market, and that will also help you to verify your what, your risk. Go to different stores that has, go to the first store instead of you going to an environment where you know that inflation will rubbish your investment and your return. Go to an environment where you can protect your capital and at the same time make value for money. Like I'm telling you, this equity that I've mentioned that has to such a yields are far above inflation. You can hedge you can hedge against inflation by investing in good stock. Especially now, most of them are relatively at low price that are selling below their increased value. It's the time for you to start looking the way of good equities. Fine, the second quarter of half year results might cause a little further decrease in price, but I'm telling you, it won't be as bad as what we saw in the month of March, because as we speak, every economy is trying to rescue the economy from this economic meltdown, and that alone, I see that any pullback now will not last and won't take too long. As far that no different countries, the world health, they are all looking at how to get vaccine to control this virus. Once vaccine is discovered and made known, I'm telling you, it will boost confidence and the market will recover faster and the economy will recover faster, and that also support the prices of equity. On that note, we'll draw the curtain here today. God bless you and enjoy your trading week. See you.